Hello, everyone. You're listening to What's the Deal, the investment banking series here on JP Morgan's Making Sense podcast channel. I'm your host, Rama Variankaval, head of JP Morgan's Corporate Advisory and Sustainable Solutions business. I'm excited to be joined by my colleagues, James Janoskey, also known as JJ. He's the global co-head of our Energy, Power, Renewables and Mining banking practice, and Chuka Umunna, head of Sustainable Solutions and Green Economy Investment Banking lead for the EMEA region. And we are having this conversation at the conclusion of our climate event in London called Cleantech Stars, where we brought together close to 50 rising stars in the climate space and many investors. Thank you, Chuka and JJ, for joining us on this episode.
Great to be here.
Thanks a lot, Rama.
So why don't we kick off with brief intros? JJ and Chuka, I'd love to hear both of you introduce yourself briefly. Perhaps, JJ, you could kick us off.
Sure. I've been based in London for 24 years. I joined JP Morgan 9 years ago. And as Rama said, I co-head globally our business that covers energy, power, renewables, and mining clients. Within that is obviously everything around energy transition, energy decarbonization. That is part of the broader spectrum of all those companies. So that's hydrogen, renewables, battery storage, critical minerals. In Europe, the transition and the green economy started a number of years ago. We've been spending time with these clients over the years, so we've been able to grow up with them. It's quite an interesting combination of covering the larger companies and then these growth companies that are key to the transition.
Fantastic. Chuka?
I'm a bit of a baby, I suppose, in JP Morgan terms, but I've been here for 3 years. I started off life as a corporate lawyer. I served in the UK House of Commons as a parliamentarian for a decade, and then I did a bit of a stint in consultancy and sitting on a few boards before landing here at JP Morgan. And I have a couple of, I suppose, key roles. One is I lead the sustainable solutions practice here, which advises corporates on how to meet their sustainability and ESG related demands of investors when they're raising capital. We're principally involved in strategic transactions, IPOs, EPPs, M&A transactions. But I also, working very closely with JJ and others in the EMEA region, I help coordinate what we call our green economy investment banking coverage. And I tend to focus a bit on the other areas beyond the energy, power, renewables, space into some of the other sectors. And so our aim amongst all the different groups is to make sure that we've got the whole of the green economy covered here at JP Morgan, which is very much part of the inspiration for the conference. I also happen to oversee what we're doing as a house, JP Morgan, in EMEA, where this is just such a huge topic for our stakeholders, for our regulators and others.
No, it's great to have both of you and the diversity of experiences and expertise you bring to the table on this very important issue. So moving on to the Cleantech Stars conference, what were some of the key themes that emerged this year? This was the second edition of the conference. So if you wouldn't mind, JJ first, and then Chuka, also point out any differences you noticed from the themes from the previous year.
As you said, it's our second annual one. We did the first one last March. We had 32 companies attend. This year, we expanded it to 44 companies that joined us. One big difference that we did compared to last year was we had a much broader spectrum of companies. It was across energy transition, industrial decarbonization, but it was sustainable ag, it was a circular economy, it was carbon management. Because if we think about the transition, and if we're going to achieve goals by 2050, it's just not the energy transition. It's across all sectors that have to decarbonize. So we were lucky to have some stars across all of those different subsectors, which was quite positive. A few things that are different than last year. I would say last year, the investors weren't as up to speed and educated about the technologies and the specific companies. This year, they were much more focused about the subsectors. They were much more focused about how the companies were progressing and asking more detailed questions, which ties to what the companies have been focused on, which is execution. This is all for them now about how do they scale and grow their businesses. It's not proof of concept. It's how do they get to the next level. And I think the other thing, which is people realistic about the challenges on raising capital and working hard to think about alternative ways to raise capital, to partner with industrial companies and to make their business plans more investor friendly. The confidence that these companies have that they can deliver in one way, despite the headwinds they're facing, is high. But I think they have much more confidence because they understand the businesses and the challenges much better. And they're all committed to making a difference. So it was exciting to have them. We had a really great success thanks to everyone's efforts. We're already planning a third one for 2025, but in the meantime, We're going to do the first one in the US on September 19th, focused on US companies.
That's exciting. We look forward to that. Chuka, I'd love to hear your perspective as well. And maybe you could address the makeup of the investors. Was it global, European? Was it venture, growth equity, public investors? Or was it all of the above?
It was mainly private capital, so private equity, growth equity, down to VC. I think one of the interesting things for me was that if you look at where has private capital gone, particularly the VC to PE space over the last couple of years or so, around a third of it has gone to low carbon energy and renewables. Around 41%, 40% has gone to transport, so EVs, battery charging solutions. And what I detect with a lot of investors is that they are looking more broadly at the other sectors that contribute to emissions that also need investment, but have the right risk return profile and a credible investment proposition. So there is really an appetite for more than the sectors I've just mentioned, which is why we deliberately sought to go a bit broader this year with the companies that were represented. So beyond obviously transportation and low carbon energy, we had food and ag tech businesses. We had some in the sustainable finance space, some clean energy, mobility solutions, clean tech, efficiency technology, lots of companies in that space because there's a real appetite to go beyond the sectors where a lot of private capital has gone so far. Secondly, I suppose you asked in terms of the nature of the investors. I think those with a global and a European mandate tended to dominate, I would say. And principally the mandate was global or European.
Got it. Chuka, you mentioned public policy and the IRA. So tell us a bit more about, is the public policy in the UK and EU at this point in time sufficiently supportive of the green transition, or the gaps that if you were giving advice, you would point out?
Oh, definitely there are gaps. First is actually quite similar to the complaints we get from clients in the US, which is the whole planning and permitting regime is a nightmare overall for some of these big green infrastructure projects. One of the reasons I suppose China has been able to race ahead both of the US and Europe is because when it delivers stuff and plans for things, it just does them. Whereas it takes far too long, we're simply not going to be able to meet our targets unless that is addressed. And all public policymakers talk about this, but nobody seems to really have a solution for these things. And I think the other thing actually is that how you can effectively use public sector balance sheets to be additional and fill the gap of funding. If you are developing first of its kind technology as a company, you often fall between that space, particularly if you're a green economy company, where you don't neatly fit within the profile of a tech company. So the traditional tech funding model that you see in VC land is not necessarily appropriate for a green economy company, which tends to be a bit more capital heavy for the early stages and asset heavy. But then it's not so capital intensive and so long term as like an infra investment. So that the infra funding model is not necessarily appropriate. And I think this is where you could use public sector balance sheets, building on the kind of principles lying behind contrast for difference and the rest of it, to actually help provide funding, a cap structure, a cap that works for those kinds of companies. And I think that that's where actually, if you're going to use public money, that's where you can really efficiently do it without spraying money around by means of subsidy, but actually being quite specific and focused and targeted in a way which will make a difference.
Got it. And then, JJ, you mentioned COP28 is providing a tailwind to the climate conversation. And then you also talked about the optimism you have at the conclusion of the Clean Tech Stars event. From what I see, we are still in a macro environment that's not entirely benign. We are not in the 2021 heyday of, capital raising being quite easy for all sectors, including climate. So tell us a bit more about what you see these tailwinds to be and what is the reason for your sense of optimism?
To build on one of the points Chuka made, which is quite interesting, is speaking to the companies. I think last year the point was, as you said, Chuka, people were assessing, can Europe ever be competitive with the US? Do I have to go to the US to make investments if I'm a company because of the IRA? The view today is that's not necessarily the case because there's enough demand and there's enough support in Europe and the UK in addition to the US. So it's not either or, it can be both. The issue is from a lot of companies that said the policy is supportive. It can be better, but the implementation of the policy into regulation, what does it mean in terms of economic terms? For instance, carbon capture in the UK. There's projects that have been approved, but nobody knows exactly what the financial framework is. What's the rate of return you're going to get? What's the RAB base? Those types of issues make it very hard to make investments. and to bring in capital because nobody knows. So I think it's partially policy, but it's also partially the regulation to support policy implementation. I think that's quite key. The other thing is we recently just announced before the conference a capital raise for one of the companies that joined us. They raised growth equity capital and quite an established company. It was kind of a more advanced round. They already have cash flows. They have a big backlog. That equity unlocked a loan that was critical from the EIB. That was the development capital. But to Chuka's good point, the EIB didn't want to put money in just to chase something. So they said, if you get equity from third-party investors and a certain amount, we will help fund some growth capital through debt. Those types of solutions, quite bespoke. They're hard, but those are ways to enable companies also to grow. But that program needs to be a bit more broad and a bit simpler to execute. So I think on comp, obviously tripling renewables, the discussions about how do you get capital to all these companies, whether it's traditional renewable companies, these clean tech companies, sustainable companies, whatever it may be. And we've seen different commitments from people. So those tailwinds are quite good. The headwinds are still there, right? How do supply chains develop? We need interest rates to come down. We need geopolitical risks to come down. We need this point about regulation. They're all not going to happen overnight, but you kind of see how people are chipping away at them. And some of these will just naturally happen as rates come down. It just is a very different discussion you have with most of these companies is they're very realistic about the challenges. I mean, you have some very passionate founders and management teams that are like, listen, I'm going to plow through this. It's going to be hard, but we're going to get this executed. And that's where people are in the mode of, let's work on this. There are challenges. Let's be realistic. Let's go through one by one how you solve them. And particularly, a lot of people spoke about how do I make sure these supply chains are viable and can scale up? And working with banks and financial investors and institutions about how do you make projects and companies bankable, which is, I think, one of the key themes that came out of COP28, if you guys agree, is people talk about, I have to make projects for companies bankable in some way. So let's work through with all stakeholders around the table to figure out what does bankable mean? And then how do you get capital to the companies? And capital is one aspect of it. We're a bank. We're going to be more focused on that, right? But I think those are the things that as we sit here today, I think are positive. It's not going to happen tomorrow, but we look forward into 24. I do feel 23 was probably where the hurricane was, and now we're coming out of that a bit for the clean tech space.
I would agree with everything you said, JJ, and a couple of observations. We are a bank. We think about capital that's fair, but also a lot of these newer technologies tend to be capital intensive. So the cost of capital is in fact a big part of the overall cost of building the company. So I think it's fair to think a lot about cost of capital. And then the point you made about interest rates needing to come down, the risk premiums needing to come down are absolutely important levers everyone's waiting for. Good news clearly is that these are cyclical issues, but both fiscal and monetary policy support, that's more of a secular support. And the consensus, we started to form global consensus around a pragmatic approach towards energy transition at COP28. That seems to be also quite secular. So like you, I also remain cautiously optimistic.
What's your sense of what's happening over in the US, Rama?
I think quite similar. It's not different at all from what you're seeing in Europe. There is a sense of optimism. Capital raising is difficult. There is no doubt about it. But there is just a lot more interesting conversations going around on how do you make projects bankable, and the notion of bringing public capital and private capital to come together and work together to catalyze innovation and to catalyze some of these technologies to go from pilot stage or early commercial stage to truly scaled companies. There's a lot of interest, attention on that topic. So not different at all from Europe.
It was quite interesting as well. At the conference, we had Ambassador Majid Al-Suwaidi, the COP28 Director General, actually come and give a bit of a talk about post-COP. And I think we talk about US and Europe, of course, how we decarbonize the global south was one of the big topics at COP28. And he told us a little bit more about the new Altera fund that the UAE has created, their new $30 billion catalytic climate investment fund, where they've partnered with TPG, BlackRock and Brookfield, all of whom were involved at the conference, which is very much focused on that. He's the CEO of Altera Fund as well. But I think it does show that those tailwinds that JJ was talking about coming out of COP28 are very real.
Yeah, and look, that fund is, I think, it's a good example of a clever way to put capital together in a way that you achieve certain policy objectives, but also attract commercially minded investors.
And I think we're also seeing some of that. And you've seen it a bit on some of the things we've been working on is the companies are also getting more creative or smarter as opposed to saying, I'm only going to raise equity at the top company level. How do I maybe raise some financing at their project level? I put some equity in, I get a third party, I can get some project finance because I have an offtake. Or you have something that's maybe a bit more structured and you give a bit of downside protection for investors, but you keep some of the upside. Those are the things that I think 12 months ago, they were very simple. Structures, probably more than these. This is a good way to bridge for some people to get capital. And I think our sense is all these companies need capital to scale up by definition, right? Where they are. Unless you really need to get it, most of them are waiting right now and staying close to investors like our conference, staying in dialogue, but formally push the button to go do a capital raise is probably later in the year than sooner, just to have some of these tailwinds get a bit stronger and the headwinds to ease a bit, right? So that's why I think we will see more and more capital raises as we go forward.
And look, again, I think time-tested phenomena, right? When money is cheap or practically free as it was for the last several years, then there is really no interest in doing complex structures, right? You do the simple thing because, again, cost of capital is low, but we are clearly not in that world. I doubt we will ever go back to that world again anytime soon. So the appetite for complexity has to go up. And I think that's perhaps an area where someone like us, JP Morgan, can be helpful. Is that a fair statement? Well, I'll ask both of you. What is it that JP Morgan can do to help our clients in the climate space?
So I think it's a combination of helping, obviously, one, just to access a very broad set of investors. I think the other thing is when we say investors, it's very important to expand it. It's just not financial investors. It's strategic and corporates, investors that can be partners, because we've seen a lot of the big companies be part of these private rounds or partner with these companies because they want access to the technology and capabilities, and it's helping use our network and access to make sure these companies are in front of them. The second thing is using our global platform. And as we do these transactions, as we're talking with investors, as we get things done, some things don't get done because they're hard, but we're able to use that market knowledge to help companies shape what business plans they go out to market with, or help them understand what investors are going to be looking for so that they can tailor, as opposed to being too aggressive about how much capital do you need to raise. How do you maybe think about steps of capital raising from that standpoint? And thirdly is between the different teams, Chuka, your team and everything you're doing around the infrastructure advisory, as we think about the corporate bank, the commercial bank, how do we think about where we can lend capital? What are the different ways that we can help these companies get access to capital that's just not equity from third-party investors? Those types of activities are going to be important for us to provide almost a holistic toolkit.
I mean, the only thing I'd add to that is just the sheer breadth of the JP Morgan platform that we can put at the disposal of our clients. And so it's not just our product set within investment banking, but if you are wanting to build out your US business and you need various different bank accounts, payment provision, payment services, that's something that we can do that often others can't. If you're running an African subsidiary and you've got your holdco in the US, but you need FX solutions just there's nothing that we don't do in that respect. And your contact at JP Morgan, who looks after you and provides the services, they are literally conducting an enormous orchestra and putting it at your disposal. And I think it's unparalleled, it's unmatched.
That sounds like a fantastic place to wrap up. Thank you, Chuka. Thank you, JJ. And congratulations to both of you on getting a successful edition of CleanTech Stars event. I know it takes a lot of work, a lot of effort, but the kinds of things that come out of it are truly moving the needle. So thank you both. And thanks to all our listeners for tuning in to another What's the Deal episode. I hope everyone enjoyed the conversation.
Thanks, Rama.
Thanks, Rob.
Thanks for listening to What's the Deal. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JP Morgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, Google Podcasts, and YouTube. To stay ahead of the curve, sign up for JP Morgan's In Context newsletter, packed full of market views and expert insights delivered straight to you. To subscribe, just visit jpmorgan.com/in-context. This material was prepared by the investment banking group of JP Morgan Securities LLC and not the firm's research department. It is for informational purposes only and is not intended as an offer or solicitation for the purchase, sale, or tender of any financial instrument.